Hello and welcome to the presentation of the Björn Borg Q1 results. I will start off by sharing some of the financial results for the group, and then our Henrik Bunge will follow with some more great news for our company. If we summarize the first quarter of 2021, we can conclude that our online sales continue to grow strongly, and it actually represents over 50% of our turnover for the first quarter of this year. If we include our own e-commerce, if we include our wholesalers, e-tailers, and also our wholesalers' own e-commerce sites, then we are well above 50% of our turnover online. The first quarter, however, we should note, was continuously negatively impacted by COVID-19, obviously. We have seen lockdowns in some of our markets. For instance, in the Netherlands, the entire quarter was closed. Also, we see lockdowns in Germany and in the UK. That obviously results in some challenges in our own retail business and clearly for our retailers in the wholesale segment as well. But overall, net sales increased by 7.4% in the quarter compared to last year. We see a strong quarter for our wholesale channel, and then predominantly driven by the e-tailers, as I just mentioned. They're growing with 68% in the quarter, so very strong online, as mentioned earlier. Our own e-commerce site is also doing really well, so plus 40% in the quarter, and they continue to show a great momentum. The own retail stores, however, declined 44%, so clearly the impact of Corona is still with us with the lockdowns that we see in some of our markets. The segment of external distributors grow very strongly in the quarter, plus over 100%. And the main increase we see in Norway, which is having a great momentum at the moment, and also a strong recovery in the UK. That has shifted from being an integrated part of our business to an external distributor as of January 2021. The license business declined in the quarter, but mainly bags category that is representing this decrease, as this category has been brought in-house towards end of 2020. So that clearly represents a change. Currency neutral, the sales increase is above 14%. Gross profit in the quarter declined slightly, 0.8 percentage points. This is mainly driven by some inventory write-downs that we did as a consequence of the lockdown in our retail channels. Currency neutral, the decrease was above 4 percentage points. The operating profit, on the other hand, increased to 22 million versus 7.2 last year. So this quite a large increase. It has come from the focus that we've had on profitability in the gross margin, but also the measurements and activities the company has taken to reduce our operational expenses. If we try to summarize this in net sales and profit over the last 3 quarters, we can see, as I said, 7% growth this quarter versus last year. And the positive drivers that we can see on the turnover is coming from online. So our own e-commerce, 40% up, e-tailer in the wholesale business, 68% up, distributors, mainly driven by Norway and UK, over 100% increase. And clearly the downsides are to be seen in own retail, which is declining with above 40% in the quarter. Profit-wise, a very large increase compared to last year, and this is then coming from generally a good control of our operating expenses from the activities taken by the company to reduce the OPEX base, let's say. We have less wholesale discounts, improving the margin slightly, but on the downside, there is some inventory write-off due to the lockdowns in own retail segments. Summarized in a simplified P&L, we can see then again the sales increasing 7.4%. As mentioned, slight decline in the total gross profit margin of 0.8 percentage points. Operating expenses, on the other hand, decreased with close to 10%, and then resulting in the operating profit increasing well over 200% from 7 million to 22. And that gives us an operating margin well above 10%, so 12.1% for the quarter. If we try to see which of the channels is providing the growth, then on the left-hand side of this slide I'm showing, we can see that the wholesale segment or the wholesale channel is driving an increase in sales of above 12 million in the quarter. Distributors, that I said, growing 100%, is increasing close to 6 million in the quarter. The downside is our direct-to-consumer, being our own retail combined with own e-commerce. In total, the direct consumer is then declining to 2.5 million, but also the licensing is decreasing by 2 million. Then if we look on the operating profit for the quarter, the main driver for the increase in the quarter is driven or coming from the wholesale channel, almost 20 million versus last year. But we do see a downside on the direct to consumer, but also licensing. Distributors are increasing with 1 million SEK in the quarter. Again, the wholesale is showing a very strong growth in our e-tailer segment, so plus 68%. And the operating profit is then increasing with this increased sales in the online, but also due to improved gross margins and reduced operating expenses. So wholesale is having a really strong quarter for the first quarter of this year. Direct to consumers, we can split up in own e-commerce and own retail. Own e-commerce increasing sales by 40%, whilst own retail decreasing 44% due to the lockdowns mentioned earlier. Operating profits then clearly declined due to the lower sales and also slightly lower gross margins. Distributors over 100% increase, strong development in Norway, but also in the UK. And then, as I mentioned earlier, the licensing business declining due to the fact that we brought the bags category in-house, so out of the licensing business. With that, I would like to hand over to the CEO, Henrik Bunge. Thank you.
Behind us, we have a year and a few months of a global pandemic, but we also have our record Q1 for Björn Borg. Of course, we've learned a lot during the last year, but there is a number of things that is popping out which gives us confidence to believe in a future that looks much better than the past. There's an ongoing health trend that has never been stronger. People are looking for brands that inspire them, that you can indeed be more, and that training is more crucial than ever to allow you to unleash your own potential. And we're that brand. When looking ahead, it's clear that people listen to brands, but more and more importantly, it is clear that people listen to people. So during Q1, we did a massive push with our brand, with a number of different influencers in all of our biggest markets. And we can see that the new arena for us is clearly online. And the connection that we have gained with consumers in various online channels is impacting our brand in a very positive way. So we see record numbers when we're measuring how strong our brand was looking at our Q1 results. So first, of course, we did an influencer attack with more than 100 different influencers that immediately, of course, increased our brand awareness. And as we've seen in the past, that's been one of our biggest challenges. People simply do not look upon Björn Borg as a sports brand, even though we are. But if we remind them that we are a sports brand, then 1 of 3 will pick us as their favorite brand. And that's a massive potential and a massive opportunity. So of course, the whole idea was to build brand awareness, and we saw that increased by more than 100% during Q1 versus last year, only through focusing all our resources on online. And of course, the whole idea is to continue to be where the consumers are. And we can see it's also immediately correlating to growth. So our e-com business, as you just heard Jens talked about, had yet another record quarter, where apparel business grew more than 294%. So looking ahead, we see a number of different challenges, but more than ever, we see that our brand and what we stand for resonates really, really well with what consumers are looking for. And already back in 2018, we felt that the new arena is online. That's where the consumers will be. And we already saw a quick move from physical retail into online e-tailers and marketplaces. And of course, during last year, that simply boomed. And our approach has always been to increase our online business simply because we believe that that's where the brand should be. And there's a number of things that points in the direction that we can really thrive in that environment. And looking at our development, very shortly, the majority of our business would come from online. And we are slowly turning Björn Borg into an online company with an online proposition, building and living and communicating our brand online where the consumers are. And that we intend to continue. But it's not only about being online. So if that's where the consumers are, it's also about taking a responsible view on how you come across. And for us, of course, making the promise that we want to make you better also means that we need to take a responsibility in how we impact the environment around us. So sustainability is a very, very high focus and will continue to be so. And we have made a massive progress in terms of different sustainability initiatives that we implemented in Q1 and will continue to implement throughout the rest of 2021. And we truly believe that the combination of focusing online, building a brand that will inspire you that you can be better, and having a very high sustainability focus, that's really the recipe for a massive success going forward. So with that said, I think looking at our mission, that we want to be here to inspire you that you can be more, be whatever you want to be. And I'm not talking to you that are running 7 times a week, that are running and competing in marathons. I'm talking to you that just want to be a bit better, live a bit longer, feel a bit stronger. Those are the ones that we want to reach out to. We want to inspire you that you can be whatever you want to be. And looking at Q1, we did that. We have a record quarter behind us, and we have high faith in our business idea and in our brand mission, and we'll continue to deliver on that also looking forward. So with that said, thank you for listening in, and just make sure you don't forget to train.
Hello and welcome to Erik Penser Bank. We are joined today by Björn Borg and CEO Henrik Bunge, and we will conduct an interview. Welcome, Henrik.
Thank you, Hjalmar.
So within the industry, several companies work hard with marketing, and marketing is an important driver for sales. How important is this driver, and how do you keep up with the current trends?
Well, I think, first of all, just a brief comment. I think the most important asset that we have is our brand. And then the second, biggest asset we have is the people working for the brand. So for me, it's about, leveraging those two. And in terms of marketing, it comes down to another 2 things. So of course, one is, how much money that you can invest into marketing. And here, we see a trend where we, in the future, will invest more than what we've done in the past. And the second one is, of course, where do you invest those marketing money? And of course, here you need to understand where the consumers are and closely sort of following the trends. And we clearly can see from last year, but also from Q2, that the consumer, to a very high extent, is now online. So it means that that's where we need to be as a brand. And whether that is then Facebook or Instagram or TikTok, or it doesn't really matter, but various online and social platform, that's where you need to build the brand today, but also tomorrow. So we will, not only invest more in marketing, but also redirect our marketing investments into a new arena that we partly also have done for 2020 and 2021.
Yes, we have seen some recent transactions within the industry. For example, last week we noticed the transaction of the Swedish brand Stronger. That is a particular case because they conduct a online-only strategy, while as you carry this omni-channel strategy. Could you elaborate on your strategy in relation to theirs?
Yeah, absolutely. I think first, of course, they've so 3 guys, founding this a few years ago, and they've been growing profitable ever since. So of course, first, absolutely, fantastically well done. I think there's a lot to learn from that. And as you say, of course, Stronger is a direct-to-consumer business model and also a pure online player. Whilst, of course, we have taken a different approach. But there's at least one thing that showcases that there is potential also for Björn Borg, and that is, of course, the evaluation that investors has on sports apparel companies. So we clearly see a number of different trends around us that suggest that the focus on well-being, training, becoming your best version is only going to increase. And we're in that arena. So of course we see ahead of us an industry growth, and of course we want to take part of that. And of course, secondly, we can conclude that investors are also interested in online growth. And we also have that. So looking at Q1, but also at 2020, we have online growth of between 50 and 60 and 70%. So that's also where we see the future of the business. However, I think in order to become a global player, and of course our ambition is to become a global sports fashion brand, I think you need to use all of the channels, all of the different opportunities you have to reach out to the consumers. And also tomorrow, there will be consumers walking into physical retail stores. And if you're not there, you will not be able to sell. And we want to be there. There will be, partners that are opening up e-tail shops and do that really, really well. And we believe that we as a brand should be there too. And then, of course, there will be our own e-com site and also, of course, marketplaces where we can operate on a third-party marketplace like Amazon, for example, or Bolt.com or Found. And I think for me, it's a strength that you can enable yourself to leverage all those different channels. And of course, we know that currently online is really booming. But who knows, what will be the growing trend 4 or 5 years from now. And of course, having the whole toolbox to leverage all different channels, we believe is a clear strength. Short term, we see that the growth for Björn Borg will predominantly come from online, whether it's marketplaces, e-tailers, or own e-com, it doesn't really matter, but that's where we want to focus our efforts.
All right. You have a strong growth within the sporting clothes segments, while as I believe many investors still see you as an underwear company. How will you work to remove this picture of you and display the potential within the sporting clothes segment?
Yes, so I think that's a $1 million question, Hjalmar, and of course one that we're working hard to crack. And we've been going on with this brand transition since 2014. And of course, it comes down to a number of different things. But of course, one is that you need to create a very relevant collection. And I think we've done that. And secondly, of course, you need to understand where you want to build that brand, which of course is then online. And now we're doing that too. But the biggest challenge we're having, but also our biggest opportunity is that, as you say, our unaided brand awareness. So if I would just ask a random guy or girl on the street, make a list of sports companies, then almost no one would list Björn Borg. Whilst of course, if I ask the same consumers, hey, make a list of underwear brands, all of them will list Björn Borg. However, if I make a list where Björn Borg is already on and I ask them, look at this list, which of these are sports brand? Then a lot of people say Björn Borg. And then if I ask them, which from this list could you consider buying from? Then Björn Borg is number 3 and number 4, depending on which market we're asking. Which means that we're already ahead in terms of purchase consideration. Before, Reebok, Lululemon, Stronger, and a lot of those brands. However, of course, too few know about us as a sports brand. So that's where we want to invest. And the key, of course, to drive awareness is online. And that's, of course, why we're now investing heavily into social media and various ambassadors and influencers, so they can help us to tell our story.
All right. If we could just briefly touch on the subject of sales channels again, how would you say, if you look at the online growth, which is very impressive in the latest quarter, in relation to the growth in the physical stores, how would you elaborate on those channels in relation to your long-term top-line growth target?
No, but I think in terms of growth opportunities for us, if we look at categories, it's clearly apparel. So both for performance wear, but also for leisure wear, both for men and women. That's in terms of category we can grow. Underwear can grow too, but here we are market leader in Nordic and in Benelux. So of course there will be limited opportunities to grow within those markets. So then it's probably more a new market. So apparel is a sort of clear growth driver for us. In terms of countries, we see a number of different opportunities, and one is Denmark. So we recently took over Denmark, so we're actually doing the first selling in of Denmark for the fall. And looking at how that country has been managed over the last probably 5-6 years, we see massive potential to grow the Danish business. That could be a growth driver. We also see a similar situation in Belgium, where we have high brand recognition. The brand used to be very super strong and also generate high turnover. But due to poor management and poor attention to detail over the last probably 4 or 5 years, that could also be a growth driver. And then last, of course, we look at Germany, where we have a fantastic cooperation with Zalando, where we see strong growth also in the German-speaking markets through Zalando. And here, of course, we have a strong country manager in place, and we will continue to invest into the German market, which again, that country and market is as big as all of the other countries we're currently in. So in terms of categories, apparel. In terms of countries, Denmark, Belgium, and Germany. And in terms of channels, of course, we believe that the growth will come from online environments such as marketplaces, e-tailers, and own e-com. And that's really where we see the growth opportunities. And then, of course, we try not to give any growth forecasts. We've said a few years ago that our ambition is to grow mid to high single-digit growth, and we believe that's going to be, realistic, given the opportunities that we see we have ahead of us.
All right. Thank you, Henrik.
Thank you, and thank you for listening. And don't forget to do a workout today. That'll make you better. Thank you.